Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Japan's markets were not affected by the national holiday. However, the Hang Seng's 3% drop in value meant that other large markets were sold. Europe's Stoxx 600 was lower and is now off 0.9% at midday. After yesterday's dramatic downside reversal, U.S. futures have suffered small losses. The dollar is riding high, outperforming all major and emerging market currencies. Gold is nearing the low of late September at $1,615. This is due to rising rates and a stronger dollar. Falling U.S. inventories lifted December WTI to a 3-week high above $1.90 yesterday. However, it is now offered below $88.50. Asian Pacific market. The composite PMI and final services readings for Australia were slightly better than the flash estimates, but still lower than September. The services PMI is at 49.3, which is higher than the preliminary projection of 49.0 and lower than 50.6. From 50.9 in September, the composite PMI was 49.8. Yesterday's big down day for the Australian dollar was reflected in trading on both sides of Tuesday's range and closing below Tuesday's low. Today's follow-through selling has helped push the dollar 0.6325. After a slight spike through JPY 145.70 yesterday post-Fed, the dollar settled at JPY 147.90. Tokyo markets were closed today, and the greenback gained support in Asia-Pacific turnover, ahead of JPY 147. Market of Europe. A 75 BP rate increase by the Bank of England is almost completely discounted by the market. This would raise the base rate to 3.0%. Swaps market has a peak rate of 4.50 to 5.75%. The October CPI in Switzerland was lower than expected. The national CPI rose 0.1% month over year. This compares to 3.3% in September. Yesterday's big down day for the euro was followed by follow-through selling that pushed it up to $0.9745 this morning. Sterling is currently testing a trend line that connects the mid to late October lows. Today, it is at $1.1220. Market of America. Initially, the market interpreted the FOMC statement as dovish. The markets changed their minds as Powell spoke. Powell stated that as policy became more restrictive, it was appropriate to discuss slowing down the pace and explicitly said so at the next meeting. Powell emphasized that rates can still be improved. The market today has many data points to look at, in addition to digesting the Fed statement and Powell's press conference. The Canadian dollar is being affected by falling equities as well as an aggressive Federal Reserve. The greenback is nearing the 61.8% mark of its recovery from the 2.5-year high of CAD 1.3980 in the middle last month. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.